Hey guys, we are back today with Jeff Miltenberger from NFM Lending again. And today we thought we'd mix it up a little, and instead of doing our usual market update, we'd answer some of the common questions that we get every day. And I've had a lot of these questions from first-time homebuyers and some new clients lately. So we'll just dive right into it. So
Awesome.
Jeff, the first question that I get a lot is, how does somebody shop for a home loan?
Well, I mean, the thing with shopping with a home loan is you do want to find the best option for yourself to make sure that you get the best deal. But a lot of times, it's not all about rate and fees too. So when you're shopping around for a loan, yes, that is important, but it also comes down a lot to the person that's going to help you, the loan officer. Is that person knowledgeable? Is that person going to find you the best program? I think that's more important than anything, because there are so many clients that just go to these online lenders that comes up all the time, and they just get a digital answer, like, here's a loan that applies to you, go ahead and take it. And in some cases, there's other home loans out there that they may have qualified for that they don't even get to see. They don't get the chance to see it because they get an inexperienced person, or they go online to try and get their mortgage, and they're just not going to get the advice. So I think you got to talk to that lender, vet them out, ask them questions, see what their experiences is. And if they start to try and push you directly to, like, well, we're just going to get you a 30-year fixed and that's all you get out of them, then I would start to maybe look around and see if there's any other options. Someone that's going to present options to you and do a full pre-approval consult. Like, my whole thing is I want to see an application. I want to collect their documents. I want to get that loan dialed in. And then I want to have this consult with them to kind of find out exactly what the best options are for them. We look at their financial position and everything else. So I think it's really important to not get sucked into, oh, I can get, this low rate, or these low costs. But at the end of the day, you may actually be paying more because you got the wrong loan. You know what I'm saying? So I think you got to talk to the people you're working with, find someone that's really knowledgeable and makes, can break things down and make sense to the layperson, to you, and make you help you understand things so you can go into it with eyes wide open.
I'm always telling my clients that the loan itself is definitely important and a huge factor, but that the lender is really important because, it's kind of that whole you get what you pay for sort of thing. You might end up with a few dollars a month difference in mortgage, depending on what lender mortgage company you go with. But isn't it worth it if you get the service and the education that you need? Because so much of our job in the real estate industry is advising and educating our clients on things that they don't know and they don't even know to ask for, which is something I appreciate about you is you don't look at just the numbers when it comes to a client. You also look at like the whole picture of their life and their situation, and you really present all the options to them. And so it's so nice to have somebody who's creative and can just say, this one might be less expensive right now, but if you're looking to sell your home, and if you're buying this as a short-term investment, you want to sell in 3 to 5 years, this might be a better way to go because it's going to keep your principal lower, or it's going to, whatever the situation may be. So just finding somebody who can really help guide somebody through that, I think, is important, which kind of answered my next question that I get asked a lot is, why choose a mortgage lender, a broker like yourself, over one of these online companies like a Quicken Loans or something like that?
Yeah, and again, I think this is one of the biggest purchases most people make in their life, is buying a home. We're talking about hundreds of thousands of dollars, right? So do you want to go online and hope some, robot is going to tell you what you need? And in my opinion and in my experience, it doesn't. It gives you options, but it doesn't give you the advice you need. And even if it does give advice, I would be very wary of it because it's probably based on algorithms. Going back to your point about your financial situation and make sure things are right, I think it's super important to review people's financial situation. And a good example of that is, say you come to me and you have $15,000 for a down payment and you want to buy a $350,000 house. Well, that's pretty much going to eat up all your $15,000, right?
Right.
That puts you in a bad financial position, in my opinion, going into this huge purchase, buying this new house, and then using up all of your funds, all of your cash. It can put you in a bad financial position in case something goes wrong. What if the furnace goes out a month after you move in? You're going to have to buy furniture. A lot of people want to spruce the place up to make it their own, painting, things like that. Well, if you use all your cash, you got no money left to do those things. And what do? Most people will use credit cards and go deeper into debt, which again puts them in a worse financial position. So it's conversations like that that you need to have with your mortgage lender in order to make sure that you're doing the right thing.
So the other question I get a lot is, how does shopping home loans affect your credit? If you apply at multiple places to shop the best rate and shop the best programs, how does that affect your credit?
I'm so glad you asked that question, because I get this one all the time too. And there's so many misnomers out there on shopping around from credit and credit inquiries. Oh my gosh, I get the credit inquiry thing so often. And I have been working on credit and with credit for over 20 plus years now. And inquiries do have an impact, but they have an impact from a different standpoint. Like credit card inquiries, car loan inquiries, they can hurt your credit. Like you go shop for a car loan, and I think a lot of people experience this. The car dealer will send your application out to 10 different banks to get you pre-approved because they want to sell you a car. Well, those 10 inquiries can kill your credit. Yes, 10 in a row, same day, kill you. A mortgage inquiry. Again, we pull a different algorithm than like the car dealer does. We pull a different algorithm than the credit card companies do. And when we pull your credit, that one inquiry probably has an impact on your Credit Karma of that other algorithm. But on a mortgage credit report, if there's no other inquiries on that credit, like you haven't gone shopping for a car or opened new credit cards, that one inquiry will have very limited effect on your credit report. I've never saw major impacts on credit. Now, I do see our credit scores coming in low. Mortgage algorithms do come in lower than what you see on Credit Karma, but that's not normally related to the inquiry. Now, here's the trick, though, with mortgages, and I think this is what you were leading me to talk about, is when you're shopping for a mortgage, the Federal Trade Commission passed a law many, many years ago, 12, 15 years ago, that you can shop around for a mortgage and have as many inquiries as you want up to 45 days. And those inquiries will show on your credit report, but they only affect your credit score as one inquiry overall, as long as the inquiries are coming from a mortgage company. So that misnomer that you don't want to shop around for mortgages is actually a technique used from other mortgage companies that tell you, oh, don't shop around because it'll affect your credit score. And in reality, they're just telling you to stay with them, or using it as a ploy to not have you shop around for a better lender, really, at the end of the day.
Does a lending company such as NFM and a bank like, say, BECU, if you apply for a mortgage at both, those will both show up, or is it only a mortgage lender and banks show up differently?
No, they would show up different. They would show up the same on a mortgage pull. So even like BECU, if you go apply for a car loan at BECU, they'll only pull TransUnion typically. And that TransUnion score is not a mortgage algorithm. But when you go to BECU and apply for a mortgage, they pull a different algorithm, the ones that we have to pull as a mortgage company. And that algorithm, once they pull your score, and I pull your score at the same time, say I pull your score a week later after BECU, my scores will be identical to the scores BECU pulled, because the inquiry doesn't matter. Now, here's one little difference there, though, that can happen is your credit report is changing on a daily basis, right? So say BECU pulls your credit a week ago, and I pull it today, and say a credit card updated, the balance is a little bit higher than it was when BECU pulled. Now that can change. Those update constantly at different times of the month. So that could affect that my score that I pull goes down, but it's not because of my inquiry. It's because that credit card or other credit had updated balances that affected the credit score adversely. And it could be alternatively too. It could go up. It could go, maybe the credit card balance went down, and when I pull the credit, the scores went from a 720 to a 727 or a 740 because the balance was lower. Does that make sense?
Yeah, absolutely. So what would you recommend are the best questions to ask for people to ask lenders when they're shopping around trying to decide what mortgage company to go with and which lenders to use?
I mean, I think a lot of it's about their experience. Like, what kind of experience do they have? What does their process look like? Like, are you just going to issue me a pre-approval letter, or are you going to actually analyze my situation and give me some advice on what I need to do? As far as vetting them out for the process too, it's like, okay, what do you do to help me win my bid? I think that's a key thing. A lot of lenders issue a pre-approval letter and then they're just done. They're just moving on to the next one, and you may not hear from them ever again. And then at the day you get into contract, they kick in again. For my team anyways, we want to be very involved in the entire process because we know we're a big part of it, right, Katie? I mean, we help them win their offer, wouldn't you say?
Yeah, absolutely. You guys are amazing. And I always tell everybody that, like for my clients, when they're shopping around to lenders and stuff, I say it's kind of a gut feeling, in my opinion. You can call and talk to some people and talk to someone and make sure that the person that you decide to go with is somebody that you feel like can communicate to you effectively in the way that you need to hear things, is available to answer your questions in a way that is helpful to you. I talk to so many people who say that the lenders that they talk to kind of come off as a little bit condescending, which is really unfair because we do this every day. But if you're not buying and selling houses every day, this is not common knowledge. I mean, there's a million questions that are going to go through your head that should be answered happily and not in a judgmental kind of way, which I run into a lot with a lot of clients. It makes me so sad to hear those stories. So just finding somebody who's going to help you, who's an educator, who's there to advise you, and who is going to be available for you as well. Because when you're looking at buying or selling a house, you're going to be, it's going to be evenings, it's going to be weekends. So having somebody who can, maybe not answer the phone right away, but get back to them very quickly and really be available to help them with all their questions and educate them along the process. And then, like you said, also goes above and beyond because, like you said, a lot of lenders will just issue the pre-approval letter and then their job is done until you get under contract. And right now, being in a seller's market with, we're going in and writing offers on houses that have 10, 12 plus offers on these houses. It's so beneficial to have a lender like yourself who goes above and beyond and is willing to call the listing agent and not say, here's their pre-approval letter, but in addition to that, let me tell you a little bit about these people themselves, their finances, their job history. They're really solid, qualified buyers. We are very confident that we're going to get this deal closed. They've already been through underwriting. Just going that extra step and really explaining that stuff to the listing agent is amazing because so many lenders just don't do that.
And or they don't realize that that's an important call too. They're like, oh yeah, they're approved, and yeah, we vetted this and that, and to go to that next level where you're actually selling the listing agent, like say, yeah, we got a solid client, we've done this, we've vetted their income, we've vetted their job status during COVID, we've done all this. I really want to work with you. Pushing the envelope. I mean, I think an individual loan officer struggles too in a market like this. There's a lot of refis going on right now. Everyone's busy, so they're not as apt to take the time to help their borrowers as much as they normally do. And that's why I built out a larger team that not only gives my clients more options to get a hold of somebody like you were talking about, but it also allows me to focus in on my clients. Like I don't have to do the day-to-day processing part of it. I just have a team that takes care of that for me so that I am available for the clients and I can answer the questions and I can sit there and take the time to go through a full pre-approval consult, which for me sometimes takes 45 minutes to over an hour with every client, depending on if they're a first-time buyer or not. I think that experience, that's what you're looking at is, you're going through, you put your application in, you send in your documents, what's that communication look like along the way? And then you get the pre-approval. What did that look like? Do you feel like, oh, wow, that was awesome. I understand more of the process. I feel confident where I'm at. you know, if you don't feel confident at that point, it's time to find a different lender.
Yeah, I agree 100%. So another thing that a lot of people ask me about are rate locks. And I know right now, with the market kind of going up and down, and the interest rates being what they are, a lot of people are wondering, what are rate locks? How do they work?
So that is actually a good question as well. And you brought up rates too. Like a lot of people say, I want the lowest rate, and they get estimates. Here's the thing that most people don't realize is anyone can quote any rate on any given day. Until you actually lock the rate in, that rate is just that. It's a rate on a piece of paper. So just be careful too when you're shopping and looking at different lenders. You know, a lender might quote you 2.5 today, but tomorrow it could be 2.6, and the next day it could be 2.7. So when you're quoting rates or shopping rates, you got to shop them on the same day. That's really important. But the bottom line is until the rate is locked in, you're not going to get that rate until it's locked, right? So what a lock means is, and typically with a purchase, you need a property. So the rate lock goes with the property. So typically you can't lock in your rate until you have a property in contract and an address. Locks go with the address. So if I lock your loan today on 123 Main Street, and then let's say the purchase doesn't go through for one reason or another, that lock's gone. It goes with that property, it's gone. Now, if you find another house the next day, but rates have gone up, and we're gonna lock a loan on 567 Main Street, the rate might be higher because it's a new rate lock. It's a new address, and everything is brand new. Now, there are some companies out there that talk about the 90-day shop and lock, where you can lock in for 90 days while you shop for a home. I don't love that option. It is an option that's offered, that we can offer something similar to that. The problem with that offer is when you're locking in for 90 days, you're paying a higher rate than market to get that longer lock. So there is higher risk to the lender because you're locking in a rate for a longer period of time. And there's also this, no, I don't have a property identified. So there's this lock of money that's stuck for a period of time. So the risk is higher. So the cost is higher. So yeah, you can lock in for 90 days to shop for a rate, but in reality, at the end of 90 days, if rates stay the same, you're going to end up paying a higher rate. Or at the end of the day, if rates go up, you're still paying a higher rate no matter what, because the rate lock that you got into is probably an 1/8 to 1/4 higher in rate than if you would have just waited and not locked at all. So I don't like the lock and shop part of it at all. I normally recommend against that. But I do recommend, as soon as you get into contract, that's one of the first things you want to do is like, okay, I'm in contract. I got to get my inspection done. But I also want to look at what's my rate lock today. Rate locks typically go in 15-day increments. So you can do a 15-day, a 30-day, 45-day, 60-day are the normal rate locks. I typically like to do a 30-day lock right when we go into contract. The reason I like that is when you're on a contract, you have this small window of time, right, to lock in the rate or to close that loan. So after 30 days, you can't go past it because you'd be in violation of the contract, right? So if you don't lock it in, the advantage would be you're floating the rate until you get closer to closing in hopes that rates might go down. The problem with that theory is they could also go back up.
Right.
So typically the best rate that you can normally get in most markets is the rate that given day, and you just get lucky if it goes down. So I'm not a big fan of luck in a 30-day window. I'd rather just lock it down and call it good and be one less thing you're thinking about. When you're buying a house, there's a lot of things going on, right? Yeah. One less thing off your plate would be amazing. So I think, my goal is always to try and get that client locked in right out of the gate so they know what the rate is. Now we can establish their payment and everything else, and then they can start, continuing to move through the process and not have to worry about that part of it.
Right. Well, and I think that just proves, again, why experience is important, because if you're looking at rate locks and you're working with a lender who isn't as experienced, they might not have the experience to tell them when's a good time to lock in that rate. So you kind of just proved your point right there.
Well, I agree with you on that too, because there are like Fridays, for example, or hedge days, in my opinion. I think a lot of lenders, because of the weekend coming, they'll price the rates slightly higher on Fridays, because going into the weekend, there's a couple of days that float by. They don't want to be stuck with a bunch of locks that go into a weekend, and who knows what's going to happen on Monday. So
Right.
I've been told that. I've noticed that on rate sheets at times. So I rarely lock on Fridays. And then the other thing is like maybe there's a market rally. Maybe news came out that said rates are going to go down, or the stock market's not doing well. In situations like that, I'm going to recommend to float for a few days, but I'll be watching it really closely, see if we can catch a little downward movement and grab that rate. But I'm not going to let it go for very long. I'm not going to sit there for 3-4 weeks and wait right up until the end. I'm probably talking about 5. Let's float for a couple of days, maybe a week.
Right. Cool. Well, I have a bunch more questions, but we'll keep it kind of short today so that we can gather more information and get some more questions from everybody for the next video. So thank you so much for coming and answering all of our questions today. You've been amazing as usual. And if anybody is looking to buy a home or refinance, make sure you check out Jeff. His information is down below. You won't regret it.
Thank you so much. If you're looking to buy or sell a home as well, check out Katie Henselman. She is the master of negotiation. You will not be sorry. Thanks so much for having me on, Katie. I appreciate you.
Thanks, Jeff. Appreciate it. I appreciate you too. Have a good one.
You too.